Hey everybody, this is Andrew Perlin, and welcome to another edition of Insurance Explained. Thank you for watching our channels and liking and sharing. I do appreciate it. Today, I want to talk about life insurance. I had a client come into my office about a week or so ago, and the main concern that she had is, do I have enough insurance? That's always the main problem. Or to be honest with you, I do see a lot of times where people think they have too much insurance. So landing on that right number really is an important thing. So what I want to talk about today is how to get to that right number. What is your number, as they say? And is it too much? Is it not enough? The first thing that I want you to remember, whether you're insuring a home, a car, or your life, insurance companies will not over-insure it. They just will not do it. So if the insurance company gave you that amount of insurance, life insurance or otherwise, understand that they think that you are worth that much insurance, because they're not going to over-insure anything. The premise behind that is if something is over-insured, there's no real reason for it to be around. Okay. So the example is if you have a car worth $10,000 and an insurance company insures it for $110,000, that car will be at the bottom of the Potomac River in no time because there's no economic reason for that car to be on the road. So when we're talking about how much, most people like to look at this from the perspective of, well, what is my debt, right? We call that a needs analysis. I've got a mortgage, I've got credit cards, I've got tuition to pay for college, and they add it all up and they come up with a number. They may also take into consideration, well, you've got money in the bank, and they may subtract those two, and they come up with a number. I'm not saying the needs analysis is wrong, but it might be incomplete. And the reason why I say that is because there could be a change in your life. We've talked about this before. Your insurance won't change, but your life does. So from the needs analysis perspective, this is what I need. This is how much I have. Subtract the two numbers together. This is my face amount. Off you go and you buy it. Okay, that's great. If you lived in a vacuum and things stayed still, no problem, but we don't. So we have to figure out how to allow for things to change. And if things change consistently or enough, that small little policy or that needs analysis may be different if you look at it a year from now, 2 years from now, 10 years from now. And if that's what happens, then you're going to find yourself in a situation where I don't have enough. So that's how people land on not having enough. And you can't have too much because the insurance company won't do that. So we got to find the right number. The next thing people like to look at is, well, I've got my life insurance at work is like 1 or 2 times salary. And as long as I'm working there, it's great. To be clear, insurance companies do not use work insurance that is not portable, meaning you can't take it with you when you leave the job, as part of your calculations for how much life insurance you have. If you have a life insurance policy through your work and you're paying for it out of your pocket and you can take that with you when you leave, it's a portable policy, that's a different story. The insurance company will definitely want to know what that is, and that will go towards your calculation. So you have a needs analysis is one way to do it. You have life insurance through work. You have another way to do it. Or you could just have a big pot of money that you're going to say, you know what, this is enough. And if I pass away, my family's going to be okay because they've got this. We call that self-insuring. If you fall into the category of self-insuring, good for you. Most people, unfortunately, don't. So they need a way to create this big block of money in the event things don't go the way they want them to. So when you're looking at life insurance or looking to figure out the number, the thing that you have to remember here is that everything starts and stops with your income. So life insurance is designed to replace your financial economic situation, your income. That's what it's there for. If you don't come home from work today, there has to be something to replace you financially, because nothing stops just because you're not there. Your mortgage still needs to be paid. You still got to put food on the table. If you have kids, you've got to educate them. You have car payments, you've got all this stuff. So when you think about life insurance, I don't want you to think of it as, well, I pass away, so there's money, put me in the ground and off I go, which is certainly part of it. But what we're trying to do is replace your income that you would have brought into your family if you had lived from today to the day that you retire. That's the point. So we use what's called the human life value calculation. They basically look at you from the perspective of how much money am I going to bring into the family between the time I do the calculation and the time that I retire, assuming that we retire at 65 or whatever your retirement age is. Simple calculation would be retirement age, let's say it's 65, minus your current age, multiply that by your current annual income. Now that's a big number in certain cases. That could be $2, $3, $4, $5 million. And people are always like, well, I don't need that much insurance. And maybe you don't, but that's normally the calculation that insurance companies are going to use to determine how much life insurance you can get. Because again, they're not going to over-insure you. So my point of saying that is, if your human life value calculation totals up to $3 million, If you apply for a $10 million policy, the insurance company is going to want to know why you want it. What's the economic reason for you to get a $10 million policy when the most you can really qualify for is $3 million based on your age and income? Now, just because your human life value calculator is $3 million doesn't mean you have to buy $3 million. All that's telling you is that's as much as you're probably going to get your hands on. When you're having this conversation, I want you to think of it in terms of, if I don't come home from work today, what is there to replace my income, which is needed to support whatever it is that's going on here? Now, let's go back to my $3 million example. If that's the number, and then you're like, well, we got a couple $1,000,000 in the bank that's just sitting there doing nothing. Okay, you can subtract that from your human life value calculation if you want. Or was that money earmarked for something else like retirement, or was that your rainy day fund? If it's your rainy day fund, great. If it was retirement money, then you might want to think about letting the insurance company handle that risk and you keep that money aside. So you really want to talk to not only your financial advisor, but your insurance advisor to determine what makes the most sense. But the problem that we run into all the time here is that people are underinsured. Most people don't have insurance at all, let's be clear, but the ones that do are underinsured because they're looking at their needs. Here's what I need today. I got a $500,000 mortgage. Okay, we'll get a $500,000 policy. When the mortgage isn't there anymore, I don't need the insurance. Okay, fine, I get that. But there's other things that go along with it. And this happened to a client of mine a while ago, but when he passed, his wife didn't want to go back to work because she just couldn't handle it anymore. She was a mess. She just lost her husband and she just couldn't do it. And luckily there was enough life insurance there where she didn't have to. Seriously, if I lost my wife, right, I don't know if I want to go back to work right away. I just don't know if I want to do that. So it's going to be too hard, I'm sure. So wouldn't it be nice to have this nest of money here that's available to me that I don't have to do it? Another thing that you want to stay away from when you're talking to life insurance agents in particular is this whole notion of, how much do you love your family? That's an awful way to sell insurance, in my humble opinion. I'm trying to make this as matter of fact as possible because it's a tough enough topic as it is, and most people don't like to have it. So instead of pulling on the heartstrings and saying, don't you love your wife? Well, of course I do. All right, but that shouldn't have to be tied up in how much insurance that I buy. I bring in X dollars to the house every month, every year. And I'm going to keep doing that until the day I stop working. That's the amount of money that my family needs, that my household needs in order to keep things going. My wife has a similar situation. If she doesn't come home from work, where does that leave my family? So she has a human life value calculation as well. And if something happens, there's money set aside so the other person can not only survive, but thrive just as if they were there. Again, life insurance is to replace you economically. That's the point. It's to replace your income. So when you're looking at how much, that's how much. Now, what you do with that money is up to you. You can pay off the house. You can fund your children's education. You can do whatever you want. But to buy insurance specifically for that purpose is a little short-sighted. I would rather you buy life insurance based on the income that you would bring into your family and then let your surviving spouse or whomever is getting the money do with that as they wish. That's what I've been seeing a lot of with these financial needs, that it's only about certain things and not about everything. So instead of having to make that decision today, I would just rather have you buy a life insurance policy that's going to replace your income fully until retirement and let your survivor figure out what they're going to do with it at that point in time. Let their financial advisor say, hey, you've got $3 million. Does it make sense to pay off the house? Let's fund the 529s, or let's do whatever we got to do, because things might be very different down the road. Now, if you're looking at life insurance purely for an income replacement perspective, term insurance is probably the way you're going to handle that. So once that term is up, you're probably not going to need it anymore. There's some things to talk about at the back end of life that would warrant life insurance as well. But as far as how much should you get, I'm a big believer in the human life value calculation. It absolutely just nails it because it takes everything into consideration with one calculation. How much money am I bringing into my household? And that's it. So when you're having these conversations, I definitely think it's important that you understand what your human life value is. I think it's important to understand that no insurance company is going to over-insure you from a life insurance perspective, or any perspective for that matter. So to say I'm over-insured from an insurance company's perspective is not quite accurate. You may think it's too much, and that's a different story entirely, but from their perspective, they don't. So again, the goal of life insurance isn't to create wealth. It is to protect the life your family has already built. And if your life changes, new kids, a new home, your income increases, responsibilities, your coverage would probably change too. Because like I've been saying before, if your life has changed, your coverage should too. So let's review it. Okay. If you have any questions, comments, or concerns, please leave it in the comment section below. I'm more than happy to review any life insurance policy. No pressure, no nothing. It's just, hey, this is what I think as a professional who's been doing this for a really long time. I'm an insurance agent at my core, and it's really important to me that everyone is properly insured and understands exactly why they're doing it. I'm of the opinion that you should do things for your reason, and then you should be able to defend it. If you can't defend the rationale, then maybe the rationale is wrong. Okay. So listen, this is Andrew Perlin with Insurance Explained. I really appreciate you being here. Please like and share. Looking forward to talking to everybody next time. Have a great day, everybody. Take care.